In this video, we will show you how to spot a reversal and trade it in an effective way. And we also consider 3 different stages of the reversal and explain why 99% of traders lose money trading reversal in a traditional way. Let's assume that we have a powerful support level and price is currently moving to that level. Once price reached this level, it stopped and started consolidating. As you can see, this purple area is our consolidation. It's actually a first stage of the reversal, which we call consolidation. This means that in that tight range, banks and other institutions are starting to accumulate their positions. It's a very key area from which price actively moves further. So there's an obvious thing that on the Forex market only 5% of traders, if not one, actually make money. And here is starting the second stage, which we call crop divorce. During this stage, market makers are actively hunting on the trader's stop loss to bring some money back. So next, we can see that the price actually breaks consolidation zone and moves higher. And many traders go long, as it sees a great buy the dip opportunity, and they placed their stop loss orders right below the key support level. And this is a huge mistake, as if the price will continue its move higher, almost everyone make money on this trade, and it's obviously not about Forex. Before we continue, join our Telegram channel where we post signals and other top quality educational content. You can find a link in the description to the video. Make sure to subscribe and let's move on. So it's actually a false rally, as market makers try to accumulate as much long position as they can, and then boom, we go down and hit cropped stop loss orders. More importantly, once other traders see this break below the support, they change their buyers and simply go short. And again, these traders place their stop loss right above the support level. And again, this is a huge mistake. As you can see, then boom, price moves higher and hits seller stops as well. And only after this, we can see the start of the third stage, which we called profit taking, where price moves in a direction of a dominant trend. But you may ask, what should I do to not trap into this over and over again? And we will show you it right now. First of all, we should go back to our first stage, and here's a very key concept. We should place the line which represents 61.8% of the consolidation. It can be realized simply by using the Fibonacci tool. We consider it on an example soon. Then we should ignore a first false rally, and only after this, a false upside movement, after price reached and reacted to the support level again, we waited for price to break our 61.8% consolidation line and then enter. You may be shocked from given structure, but guys, it's quite simple structure, and let's consider it on an example, step by step. So first, you should correctly identify a level of support and resistance, and what is more importantly, you should do this on a higher time frame. For instance, if you trade 1 hour time frame, you should go to the daily and then adjust it on the 4 hour time frame. And the higher time frame is, the more powerful support and resistance can be identified. Let's do this on an example. So here's pound Aussie, daily time frame. And as you can see, for now we are in a downtrend, meaning that we will be looking for a trend reversal to enter long. Let's go to the daily and identify key level. And here it is. As you can see, this level was respected and rejected multiple times in the past. Right here, right here, right here, and now the price is approaching this level again. And before we continue, press the like button and guys comment below what you want to see next, as we always check the comments before decide what to create next. In addition, leave the comment what you think about this strategy. We really enjoy to hear from you guys. Moving on. Step number 2. You need to identify a consolidation at a key level on the lower time frame. So let's go to the 4 hour time frame and do this. So here on the 4 hour time frame, we could adjust our key support level, and here it is. And as you can see right here, we have a very tight consolidation, which is great. Consolidation means that the price trades in a tight range. Next step, we should use a Fibonacci tool and draw our 61.8% line. Let's do this. We draw from the top to the bottom, right here. And here it is. Let's draw a line at this level. Here it is. And finally, once we have all this, we need to wait for an entry. So as you can remember, we first ignore initial upward movement from the consolidation, as it's a false upside movement, as you can see it right here. And then we wait for price to react to our support. And boom, as you can see, all stops of these bears was smashed. So what we do next? We wait for price to break above our line and enter. So we could enter right here. You could also use a lower time frame for an entry. But for now, let's do this on the 4-hour time frame. As you can see, we enter right here with stops right below this breakout candle and go 2 for 1. And as you can see, boom. But since it's a very powerful setup, let's see what happens next. And as you can see, boom, price go up drastically. So guys, it's only one strategy and only one scenario. If you want to see more, go down below, subscribe to our Telegram channel, to our YouTube channel, thumbs up, leave the comments, and thanks for watching. See you on the next video.